All right, in this video, I want to look at the dollar. I think the dollar is going to drive the correction in metals, and it should drive a correction in the stock market, although I am not anywhere near as confident that that's going to happen as I am that we're going to get an intermediate correction in the metals. Um, we just live in our modern managed markets. We get a lot of government intervention, and it's entirely possible that um, the powers that be will just halt any further correction in the dollar ahead of the election. Um, the stock market formed a swing today that has me wondering whether or not that might, they may have stopped the correction in stocks. I outlined a strategy for my subscribers this evening, and actually I've gone over this several times in the last couple of weeks. A strategy that will allow us to profit either way if we if we do get a full intermediate cycle low, something that meets all the parameters and qualifies as a true intermediate cycle low in the stock market, then we can use some leverage and make a lot of money. Uh, if not, we've got a strategy in play where we will at least make some good money. I'll put it that way. But we really need to have a true intermediate cycle low to make to use leverage and to make really big money. Hopefully that will unfold in stocks. Although, like I said, I'm not anywhere near as comfortable as that in our modern managed markets. They may have stopped the intermediate decline yesterday. That could be the final intermediate cycle low, and if that's the case, we're going to be kind of stuck in unleveraged positions in the stock market until or unless we can get something that qualifies and meets all the parameters for an intermediate cycle low. So back to the dollar. As many of you know that have been watching my videos here for a while, I have been under the assumption that this was a basing phase and that the dollar was going to give us at least a counter trend rally. There's even a small chance that this is a slightly short 3-year cycle low right here, and I've covered that in one of my recent nightly reports as well. I don't think the odds are very high for that, but it is a possibility. I think we're probably going to just get a bear market rally that rallies for 4 to 5 weeks, maybe 6 weeks, and then rolls over and comes down and makes another lower low. And I think that would drive um, another big rally in the metals and probably stocks as well. That's probably going to occur after the election. The election is such an obvious trigger event that my assumption at this point is that the dollar will rally into the election, and then once the election is over and we got to know the results, then I think the dollar rolls over and starts down, and we get our true 3-year cycle low sometime in early to mid 2021. That's when it would normally come due. But we've, as I said, this, in my opinion, this is a basing pattern. It's almost 2 months long. A 2-month base can power a pretty good move. You can see today the dollar did close back above the 50-day moving average. You'll notice a subtle shift here. Move this in a little closer. Uh, During the declining phase here, you can see we're getting lower highs. So you can see how this high was a little bit below this one, this rally a little bit below this one, and then also lower lows. So each one of these dips is a little bit lower than the previous one. Well, that pattern has now changed. Now we've got higher highs. You see that this high has come in above this one, and higher lows. So this dip here has held well above what I'm pretty sure at this point is an intermediate cycle low. So the pattern has shifted from one of lower lows and lower highs to now we're in a pattern of higher highs and higher lows, and we've broken the 50-day moving average. The next hurdle is we need to break, and we need to close above this intermediate downtrend line. I suspect we're going to close well above this. We should hold above the 50-day moving average long enough to turn the 50-day moving average back up. And let me convert this to the 200-day moving average. I kind of suspect that between now and the first or second week of November, the dollar is going to come back up and maybe kind of kiss this 200-day moving average goodbye. And then that would be, our final confirmation, although this failed intermediate cycle here is already confirmation enough for me that we are, in a bear market in earnest. But if we rally up just enough to kind of tag this one last time and then start back down again, that would be the final confirmation for me anyway that we are indeed in a long-term secular bear market, and we have been since 2017. All right, so I'm going to zoom out here just a little bit. I've been pretty steadfast in my call here that this was a secular bull market top, and that the dollar had started a bear market, and so far we have not done anything to disqualify that assumption. This peak here during the crash in March was not able to rally above the 2017 highs, so the bear market is still intact. This 3-year cycle low here, this is the rally out of the 3-year cycle low. I think the ECB was artificially suppressing the euro, which was keeping the dollar propped up a lot longer than it would have naturally. But even so, it was not able to make a higher high and negate the bear market thesis. And now we've got a lower intermediate cycle low. So here was an intermediate cycle low here, this lower low of this intermediate cycle. So a larger degree, lower lows and lower highs is in progress. Again, as I said, there is a slight possibility that this might turn out to be a 3-year cycle low that was a little early, and if that's the case, then we're kind of in no man's land because we would not have made a lower 3-year cycle low. We need to go above or below this to confirm that the multi-year cycles, the 3-year cycles, are also left translating and failing. I think that's going to happen. This is the 200-week moving average. You can see it's starting to turn down. That's kind of usually what my main confirmation that we're in a secular bear market is that the 200-week moving average starts to turn down, which it is. So my thinking is that we're going to get just a bear market rally, one that lasts maybe 5-6 weeks. 7 weeks tops, comes back up to tag this 200-week moving average and then kind of kiss that goodbye, and then down we go, and we get our 3-year cycle low in the normal timing band. Last one here was in early 2018, so we would be due again in early 2021 to mid 2021. So that's my assumption, is that this rally is not going to last too long, and it's going to roll over, come down, and we're going to break below this 3-year cycle low and give the last confirmation that this was the bull market top in the dollar, and everybody that's been preaching to us for the last 7-8 years that the dollar's in a bull market, they will have been wrong. This is going to turn out to be the top of the bull market and the start of a bear market. And I think it is starting in earnest, or will start in earnest, once we get the top to this next intermediate cycle rally. And then I think this intermediate cycle will also left translate. We'll come down, we'll break below this, and also we'll break below this 3-year cycle low out here somewhere in early to mid 2021, and that'll be the final confirmation that the dollar is indeed in a long-term secular bear market, and probably still has another 3-year cycle after this one. So 2024 would be my 2024, 25, somewhere in there would be my guess for a final bear market bottom in the dollar. And I think that bear market bottom will go below the 2011 and 2008 lows. We're going to have a much more damaging bear market than we did in the 2000s. All right, so I'll zoom in just a little bit here. You can see, assuming this is the final intermediate cycle low, which we are getting pretty much all the confirmations we need, other than breaking this trend line, which I think is coming. You can see we're on week 3 of this intermediate cycle. So we're still in the advancing phase of the intermediate cycle. We're on week 3. I suspect we're going to top by week 8, so we might have 4 to 5 more weeks to go before this turns and the fundamentals turn the dollar back down, and we start moving down into what I think will be a final 3-year cycle low, which will be much more damaging than this decline here, and that'll be coming early to mid 2021. But I would expect this rally, for another 4 to 5 weeks is probably going to drive the metals down into an intermediate cycle low, and I've covered that in previous videos. And possibly it drives the stock market down into an intermediate cycle low. But again, let me say I'm not anywhere near as confident as that, because I am positive that central banks and the plunge protection team are going to do everything they can to keep stocks propped up ahead of the stock market. I just don't know whether or not they are going to succeed. And I don't have any tools that can tell me whether or not they're going to succeed. But I'm pretty sure they're going to try.